Nancy.
Right to Nancy, so.
Nancy, welcome, and
All right, well, good
Floor is yours.
afternoon, Mr. Mayor, members of the council, administration that is present. I'm happy to go over the results of our audit for the fiscal year ended December 31st, 2023. So to start out, if I can get this to, oh, there we go. We have all these fun extra pages in the PowerPoint this year. So to start out, I want to talk about the reports that we issue as part of the audit of the financial statements and then also the single audit. So first and foremost is our independent auditor's report. And if you do want to read this in its entirety, it's in the front of the financial statement document. And it summarizes the work that we do as auditors, also talks about responsibilities for the financial statements and how those lie with management. And if you are reading it, the second paragraph is the most important, and that is our opinion. And what we're issuing is an unmodified opinion again this year. That is what we've been issuing for as long as I've worked with the city of Fergus Falls. And it's an indication that everything is fairly stated based on the results of our audit. So a clean opinion, and again, the best that we as your auditors can offer. And then in addition to that, we have several other communications, and all of these are in that separate document. So the one that is titled Government Auditing Standards, Schedule of Expenditures of Federal Awards, and Legal Compliance. So that covers the other three reports. The first one is our report on internal control and compliance related to government auditing standards. And these standards are required because of the funding that you receive as a city. And they require us as auditors to look closer at internal control and also compliance with laws, regulations, contracts, and grants. And based on that, we do have the one internal control finding, which is not new for Fergus Falls, and that is the lack of segregation of accounting duties. And that is there because of the limited number of people that you have involved in the day-to-day and the reconciling activities of the city. I don't think anything changed from that from last year. Basically, the two key areas are Bill's position having access to all of the things, and then also payroll. There's some overlap in some of those duties just for operating efficiency.
I will chime in on that, just so I do have the ability to make journal entries has
Yes.
been one of the big things. However, I do not. We worked that with the auditors that it's best if I don't, I can create them, but have someone else enter them. So to give you a little assurance, but I do have the ability to do it.
Right,
So
and there's
thus,
also a review on those journal entries, a second
Yeah.
set of eyes. So when we look at findings, we have three levels that we put findings in. The first one would be a material weakness. The city of Fergus Falls does not have material weaknesses. And the second is where your finding falls, and that's a significant deficiency. So less severe, but does still warrant attention by you as the governing body for the city so that you remain aware as you go through financial information. No compliance findings related to those standards. And then this year, your federal funds did jump over the threshold. So we were required to perform a single audit. We took a look at the highway planning and construction grant that you received. And based on that, we're issuing an unmodified opinion on compliance and also no internal control findings as it relates to those compliance requirements that are applicable to the federal program. So a little bit different than the overall financial statement internal control. And then finally, our last official letter is Minnesota legal compliance related, and that covers 7 broad categories of legal compliance. And we get the direction right from the state auditor as far as which statutes we look at and ask questions about and test related to accounting matters in those statutes. And based on that work, no findings there as well. So really just the one written finding for the city overall, which has been typical over the last number of years. So nice work on all of that. And then we have a separate document titled Communication Letter, and in there is where we have all of our financial information that we'll cover tonight. It also has a section in the front titled Required Communication. So these are things that we're required to put in writing to the city council, to the governing body for the city. And it would be our tool if anything significant was uncovered, if we had any difficulties with management, disagreements, those types of things. Happy to report nothing strays from our standard language in that area. And then in the back of the document, you'll find emerging issues, which are new GASB standards that are coming in the next several years. So if you love all things accounting and GASB accounting, it's there for you. If you have trouble sleeping, also there for you. So moving on then to the financial information summary, really high level. We have charts that look back 5 years, but we're going to key in on differences between 22 and 23 for discussion. Feel free to jump in with questions as we go along. So starting with your general fund, we have several charts and graphs, and the first one is your fund balance. And you can see for fiscal 23 that did jump up about 1.3 million. And in a couple of categories primarily. So first of all, your restricted category did increase from 1.1 million up to almost 1.8, and that relates a lot to public safety one-time grant that you got at the end of the year from the state of Minnesota. Was not spent, so it fell to your fund balance. There was also a local housing grant that same type of deal. So it was received and not spent in fiscal 23. And then the other area that saw a larger increase was in your unassigned. So you have a policy of a minimum of 35 to 40%. Right now, your unassigned is at 44%. So pretty close to being right in line with that policy and healthy at year end. And the occurrence of that increase has to do with some of the operations of the city, and we'll look at those as we look at revenues and expenditures in the general fund. So the next chart, again, high level. So this is looking at total revenues and total expenditures. And we will move on to the details after this chart. But revenues were up about 15.5% for the year. Expenditures actually decreased about 1.1%. So you had still excess expenditures over revenues of about $306,000 for the year. And when we move to the details of those revenues, like I mentioned, they were up 15.5%, and several of the categories or sources of revenue contributed to that increase. First of all, your taxes were up about $489,000, or 8.8%, related to an increase in the levy. The intergovernmental category up about $500,000, related again to that one-time public safety aid that you received. That was just over $600,000, I believe, if that's what sticks in my head anyway. And then your miscellaneous category, you saw the largest increase there. So last year you see a deficit, a negative 121, and this year a positive 796. And most of what's going on there is the change in the recognition of the value of your investments at year end. So last year you had a large unrealized loss. This year you have an unrealized gain. So those fluctuate just based on market conditions at the end of the year. Most of your investments are held until they mature and gain their full value. Next chart takes a look at your budget to actual for those revenues. So revenues in total were over budget about 1.7 million, or 13.7%. Three categories contributing to that in the biggest ways, and you'll hear themes in these differences or these overage amounts. Intergovernmental over related to that one-time public safety aid and also that local housing aid. Also related to some street maintenance projects, money that came from the state that was more than what was anticipated. Charges for services over about $197,000, related to a conservative budget along with unbudgeted amounts for the off-season ice rental that occurred in 2023 that was relatively new. And you'll see that here in the revenues, and you'll also see it in the expenditures. And then finally, miscellaneous over 433, based on a conservative budget related to those unrealized gains that you had. Two pie charts on the next page that take a look at those sources of revenue as a percentage of the whole. And when you look at this, you can see that the percentages are very consistent year over year, and you're getting 83 and 87% respectively of your revenues from intergovernmental and property taxes. So that's where most of the money is coming from for the general fund operations. Switching gears then to expenditures, as I mentioned earlier, those were down about 1.1%, so pretty close to 2022 levels, but some fluctuations in the categories here as well. If we look at general government on the far left, that increased about $336,000 related to wages and benefits, phased retirement for your IT director, and then also new communications department and new communications manager in that area. Public safety increased primarily related to wages and benefits, including workers' comp being higher than it had been in the past. Offsetting those increases, right next to that, you'll see streets and highways was down about $513,000 related to not completing that overlay and seal coat project in 2023, and also decreased snow removal needs for the winter. Jumping over just a couple to culture and rec, that was up about $222,000. Wages and benefits there, utility costs related to that off-season ice, and then also repairs on the dehumidifier system. So several things going on there. And then if you go all the way to the right, the capital outlay, that one fluctuates just based on what projects and purchases you have. So that was down about 468,000 related to the park improvements that occurred in 2022. Did not repeat in 2023. And then like revenues, we have the budget to actual. So expenditures were under budget about 11.1% or 1.8 million. Several things going on there. General government was under budget related to some expected benefits for your retiring employees that went unused for the year. Streets and highways under budget for those unexpended seal coat and overlay projects that carries over to future years, and then also lower snow removal costs. Culture and recreation was actually over budget, and again, that's those off-season ice costs that you incurred during the year. And then finally, to the far right, your capital outlay under about $1.5 million, and that is just the tool that you use to save for future purchases and future projects. So those amounts that are unspent do go into segregated fund balance in the general fund for the future. And then we have the two pie charts like we did for revenues. And again here, percentages year over year, very, very consistent. So you're spending primarily in the same areas that you have been in the past. Nothing super unusual or different year over year there. And that is the general fund. Any questions on any of that? All right, then I will move to your utility funds. And I just want to point out before we go through all these charts, each one of your utility funds did have operating revenue for fiscal 23. So those were all operating in the black for the year. Starting with your waste management revenues, operating revenues actually down just a bit, 2.3% in this fund, and that had to do with a decrease in demo fees, offset by a 3% increase in the rates. And operating expenses, pretty consistent when you compare 22 to 23, increased just 1% for the year. We have sewage disposal. Operating revenues in this fund, very flat, decreased about 0.2%, so virtually the same as each of the last 2 years, actually. And then your operating expenses up about 8.5%. You had increased maintenance costs and costs for a project that is no longer moving forward. So those were expensed during the year. And then we have your water department. Here you see an increase in your operating revenues to the highest point in the 5 years that we're looking at. And that had to do with rate increases and increased consumption based on that dry summer we had last year. Expenses also up. That was up about 11.8%. You had increased supply costs, and then water system study and related plans for the demolition of an underground water storage reservoir that occurred during 2023. And then finally, your last utility fund is your stormwater fund. And this fund did see a nice increase in operating revenues, up about 21.1% based on a rate increase. Also, operating expenses were up. Those were up about 5.6% due to some water treatment at Lake Alice. And I do want to point out that this picture is not a typical picture for cities. Stormwater is extremely hard to make sure that your revenues are covering the costs. So nice to see this not in a deficit for each one of those years. So nice work on that. And then we have your liquor fund. This fund did see a little bit of an increase in sales. They were up about 2.4%. Cost of sales were up 0.8%, so that did increase your gross profit percentage, and we'll look at that in the slide on the next page. Operating expenses actually down about 2.1%, so lending to 1.176 in operating income for the year. And that allowed this fund to transfer just under $705,000 to the general fund to reduce that property tax burden. So a nice contribution from the liquor fund. And then we see your gross profit percentage on this chart, and I do want to point out that each and every one of these years it has increased, ending at 33.0%, which is above statewide averages as we've seen. East and West both contributing to that. East gross profit percentage at 32.8% and West at 33.6%. And then we do have the chart that compares each of those funds. each of those locations, excuse me, and you can see that both of the stores are contributing to the bottom line. East obviously in a smaller scale. And then the next couple of charts take a look at your tax capacity, your market value, and then your tax capacity rate. And the first one is your tax capacity rate. So you can see that did decrease from 59.03 in 2022 down to 53.8 in 2023. And the next slide really tells the story of that decrease. You see the blue on the right there, that is your net taxable tax capacity. That jumped up 18.3% in 2023. Your levy did increase as well, but that was up only 8.1%, which allowed for that decrease in your rate for the year. So it's a nice picture to see as well. And then the last chart I have takes a look at the city as a whole. So this combines all of your funds together, and it looks at it from that full accrual perspective. So really simplified here, but is the net position, so the net value of the city. And on the bottom, we have your net investment in capital assets. So that's the largest portion of your value, which makes sense, and it has been increasing. So you're able to add those capital assets and depreciate them, and your debt is being paid off faster or not issued as quickly. So you're increasing that value, which is a positive to see in that area. Right above that, you'll see your restrictions. Those did increase in 2023, and a lot of that had to do with the increases in the general fund that we already talked about. And then the very top portion is your unrestricted, and that's what's available for future spending. That did decrease a bit in 2023, and it had a lot to do with the capital purchases that you made. So not issuing as much debt, saving for the future, allows for that bottom number to increase, while the top decreases but still remains very positive. And that is everything I have. So any questions? Anything you'd like further detail on?
Thanks so much, Nancy. Questions from anyone?
So on the sewage fund, what was the project that didn't capitalize the?
So that was, you know, the large dairy project out off of 116.
Yep.
We did a study on the, on our sewer plant that we had capitalized the previous year, you know, that eventually we'd build that into a new asset, basically. But since that's not moving forward right now, we expensed it this year because it's just a study.
Yep.
So,
Okay,
yep.
thanks.
Other questions? Some questions? All right.
Good job, Bill.
Thank you.
Very
Thank you,
good.
Nancy.
Yep, thank you, and thanks to Bill and the team
Sandy.
Sandy.
for being so well prepared for us and putting that large report together in a very effective way. So we
Yeah.
appreciate all the work as well.
Really
And we
that.
appreciate working with the city of Fergus Falls and the long-term relationship that we've had.
Yeah. Bill and Sandy, I might often say, hopefully maybe don't say it enough, but the best in the business. We're lucky to have both of you, and thanks so much for what you do, and really mean that.
Thank you. Now, you received this in your packet as an electronic version. If any of you wanted a paper copy like this, let us know and we'll get one to you.
Thanks, Bill.
Very
All right.
It's nice that we've worked together for so many years too. You kind of each know what the other needs and wants, and
Yeah,
makes
the
it a whole lot
process-
smoother, I would imagine.
It does, and we do rotate in new. I've been the partner as long as we've been. Well, as soon as I became a partner, anyway. But our manager, our in charge, we bring in new people just to get a fresh set of eyes on things because everybody does look at things differently. So we try and keep it fresh but consistent as well.
They're good at surprising us each year with something that's part of your procedures as they come and do
is.
things that we're not aware they're going to be looking at, so.
Yeah, that's part of what we're required to do when we plan the audit. What can we do? Where's there a risk, and what can we do that's different than what we've done in the
Be
past?
sneaky.
Yep.
It's like a secret shopper.
It's an element of unpredictability, is what we call it in audit speak.
Sneaky is what they call it.
I like that. Yep. I like that.
Just
All
as
right.
long as I don't fail on that sneaky thing.
Thanks, Nancy.
Yeah, you're welcome.